Good afternoon, welcome to your weekly market update from the London Academy of Trading. This week we saw a raft of UK data out, all negative. We started on Monday with UK GDP, here clearly coming out negative 0.3% down from the 0% estimated. Midweek on Wednesday we had UK inflation data, CPI year on year coming in at 1.3%, down again from the 1.5 estimated. Finally for the hat trick we had UK retail sales data coming out down here, at negative 0.6%. Estimate was plus 0.5%. 3 out of 3 for bad data. The UK reaffirming Bank of England Mark Carney's sentiment that January rate cut is becoming ever more likely. Across the globe, official figures showed the world's second largest economy, China, have expanded as predicted, but 6.1% in 2019. It sounds like a lot. It is more than most leading world economies. However, it was their worst figures in 29 years. Of course, it's on the back of the 2-year trade tensions between China and the US. That being said, it has been said that Chinese policymakers have been trying to step down expectations for years, as their unsustainable growth has trashed the natural environment and led to an explosion of debt, so potentially a blessing in disguise. Finally, on Wednesday, we did see President Trump and Chinese President Xi Jinping sign a deal aimed at calming trade frictions. Of course, that will impact the markets, and main one, of course, being the United States stock market, the S&P 500. S&P 500 has been growing, as you can clearly see. We have had this growth considerably in a weekly chart here. What I've shown here is basically Trump's election time and his tenure since, and the same amount of time beforehand. And clearly you can see this was the US stock market in the same time before Trump, and then this was after he's been elected. Considerable growth in the same amount of time. Potentially foreseeing what may happen in the future, but it does seem like he is standing by his word and getting the US stock market to climb ever so aggressively. Finally, the UK and German stocks, DAX and the FTSE, of course, have not seen a similar rally, generally due to the fact of ongoing Brexit loom. 31st of January, that's when it's due to happen for the FTSE, but then, of course, the German DAX, we can clearly see here, at the all-time highs, but not yet surpassed them, simply because since 2013, they've had their worst bout of data as well. Economy over there not doing so great. So, fair few things happening this week, but obviously a lot more to look forward to next week. Have a lovely weekend, everyone. Take care. Bye for now.